Good morning, ladies and gentlemen. Welcome to Sygnus Credit Investments Annual General Meeting. As you know, Sygnus Credit Investment is domiciled in St. Lucia, and so this morning AGM is going to be a simulcast. And over in St. Lucia, we have our chairman, Mr. Clement Wayne Iton, who I'll hand over to shortly. I'd like to make special welcome to our directors. I see Hope and Damian, and of course, Peter Thompson. So our chairman is ready for us, so without any further ado, I'll hand over to Mr. Chairman.
Thank you so much. Good morning, ladies and gentlemen. My name is Clement Wainwright Iton. I'm the sitting chairman of the board of Sygnus Credit Investments Limited. I take this opportunity to welcome you to our second annual general meeting of shareholders of SCI, our first as a public listed company. I was advised by a representative of our company secretary, MCSI's Rory McNamara, that in accordance with the company's articles of association, a quorum is present by proxy and in person. I therefore now declare this annual general meeting open for business. There's going to be a slight change in the agenda in terms of sequence of items. And I would now invite Director Ike Johnson to address the meeting.
Good morning, ladies and gentlemen. My name is Ike Johnson, as indicated by our chairman, and I'm a director of the board of Sygnus Credit Investments Limited. I wish to once again welcome you all to our second AGM and first as a listed company. I've been asked to conduct a particular item on this agenda, the election of directors. Director Clement Wainwright Alban Iton, who is our chairman, and Director Ian St. Ville Williams retires by rotation in accordance with Article 101 of the company's Articles of Association. Both being eligible for re-election have offered themselves for re-election. With your permission, I would like to bring this resolution forward and ask that the election of Director Iton and Director William be done before items on the agenda. I move for the adoption of the following resolution. That Clement Wainwright Alban Iton, who retires by rotation in accordance with Article 101 of the company's Articles of Association, and who being eligible offers himself for re-election as a director of the company, be re-elected a director of the company. That Ian St. Ville Williams, who retires by rotation in accordance with Article 101 of the company's Articles of Association, and who being eligible offers himself for re-election as a director of the company, be re-elected a director of the company. Shareholders who have sent in proxies need not take any further action with respect to this matter. All in favor of this resolution say aye. I would hope not. All right, so we can declare both motions being carried, and I'll hand over now to Director Iton to continue with the meeting. Thank you.
Thank you, Ike, and I would wish to thank shareholders for their vote of confidence in both Ian and myself to continue as directors of your company. And we pledge to do our best in the interests of all stakeholders. Ladies and gentlemen, as Director Johnson intimated your meeting is being conducted in St. Lucia, where the company is domiciled, and streamed to a satellite location in Kingston, Jamaica. Today we have 5 of our directors with us. Ian Williams is sitting here with me in St. Lucia. Ike Johnson is at location. Miss Hope Fisher is at location. Mr. Peter Thompson is at location. And Mr. Damian Chin is at location. Also in St. Lucia with me is Rory McNamara, a representative from our company secretary, MCSI. In attendance this morning, we have members of our investment advisors, senior management, in the person of Beresford Gray, the CEO of Sygnus Capital Limited, and Jason Morris, the Chief Investment Officer of Sygnus Capital Limited, both of whom would address you later. At this juncture, I would like to recognize our former director, Nikita Edwards, who has not offered herself for re-election. Ms. Edwards would have retired by rotation at the 2019 AGM, and who, being eligible for re-election, tendered her resignation effective October 25th, 2019. We wish to recognize the invaluable contribution that Nikita made in the capacity of director and also as the chair of our Audit and Governance Committee. We wish her Godspeed and all good fortune in her future endeavors. In attendance, we have an independent scrutineer in the person of Mrs. Julie Thompson James of Cube Corporate Support Limited, who would be assisting in the voting process. The Jamaica Central Securities Depository, the JCSD, our registrar and transfer agent, is represented by Ms. Tamika Rickett. Throughout today's meeting, I would be referring to Sygnus Credit Investments Limited as the company or SCI. You would have been handed a copy of the agenda which sets forth today's proceedings. I take item 2, I've been advised that by the corporate secretary that we have no apologies in writing. So we move straight into item 3, the purpose of the meeting. The purpose of this annual general meeting is to seek shareholders' approval for the respective resolutions as outlined in the notice of the meeting. The first item of ordinary business is the adoption of the audited financial statements for the year ended June 30, 2019. The second item is the recommendation of the final dividend for the financial year ended June 30, 2019. The third item is the election of directors, which we've just concluded. The fourth item is directors' remuneration. The fifth item of business is the appointment of the auditors, KPMG, and setting their remuneration. The resolutions were duly set out in the notice of the annual general meeting dated the 25th day of October 2019 and duly signed by the company secretary. The notice of the meeting and the form of proxy were dispatched to all shareholders on record in accordance with the company's articles of association. If there is no objection, I propose that the notice of the meeting be taken as read. I hear no objection, so the notice is taken as being read. I would spend a minute to outline the proceedings and the conduct of voting. It might be helpful to explain briefly the procedures we would follow for the AGM. After each resolution has been proposed, there will be an opportunity for you to ask questions about that particular resolution. If you have a question, please state your name. If you are a proxy or a corporate representative, your name and the name of the shareholder you represent before asking question. Voting by proxy, the Secretary has collated the proxy votes received up to 48 hours prior to the meeting and details of the number of proxies lodged on each resolution, the balance for and against the resolutions, and the number of abstentions. Voting by show of hands. For those in attendance, voting shall be by a show of hands. The votes are calculated simply by reference to the number of members physically present at the meeting in person or by proxy or corporate representatives. If we were to get to a poll, we have the procedure. I won't outline those procedures at this juncture. I would now spend a minute to define the business of the meeting. We will conduct the formal business as set forth in the notice of the meeting, with the exception of Resolution 3, which has already been adopted. In order to conduct an orderly meeting and give all eligible shareholders an opportunity to participate, we would follow the procedures in the program. During the conduct of the formal business, questions and comments from the floor should pertain to the specific proposal or resolution under consideration. Again, I'd ask anyone wishing to speak to raise his or her hand, and an attendant would provide you with a microphone where you would state your name and status as a shareholder for purposes of the minutes. I will now proceed to present the resolutions which constitute the formal business of this meeting. Resolution number 1, audited financial statements. In accordance with Article 56 of the company's Articles of Association, the company is obliged to lay before this meeting the audited financial statements together with the reports of the directors and auditors, which are contained in the company's annual report for the year ended June 30, 2019. Copies of the audited financial statements, together with reports of directors and auditors, were dispatched to all shareholders, and copies are also available at today's meeting. If there is no objection, I propose that the financial statements, together with the reports, be taken as read. Before asking for the adoption of the financial statements, I now invite shareholders to comment or ask questions on the financial statements and reports as tabled.
Yeah, good morning, Mr. Chairman. My name is Michael Hendricks. I just want to ascertain, you see, why professional fee has increased from 32 million to about 60 million.
Jason, would you take that?
My name is Michael Hendricks.
Morning. Let me see what that is. Okay, so on page 51, where professional fees is represented as 60,609 versus 32,572. That's what you're referring to, correct? So it's, first of all, it's thousands and not millions, right? Yeah, sure. So the main reason for this is that during the last financial year, SCI became a listed company, and so it had to start pay listing fees to the Jamaica Stock Exchange. That's one of the major reasons. And the other one is that during the year, financial year, SCI also was incorporating a new financial model dealing with what you call expected credit loss. So during the financial year, IFRS 9 became effective, and what that meant is that all debt type instruments, we have to start accounting for them in a different way, and that required SCI to actually hire an independent organization, namely PwC to be exact, to actually build a model for us to actually be able to enumerate the value of what you call expected credit losses, which is an upfront charge on every single debt instrument that you're carrying on your books. So those are the two major reasons why the fee would have increased from 32,572 to 60,609. Does that answer your question? Excellent.
Good morning, Mr. Chairman. Livingston Young.
Good morning,
Livingston Young. You can turn to page 52. There's a couple of questions asked. Share capital. Total income achievement for the year. Other income achievement. You can explain to me between, let's see the year. All right, this 1,423,000. You can explain to me between income achievement and a little bit from please. The profit for the year.
Thank you for that question. Again, through your chair. So you're looking at page 52, and you're looking at the number under retained earnings that says 1,423,747. So that's actually the profit for the. Okay, so which one are you referring to? The 1,423 or the 87,503? Okay, so 1,423, that's actually the profit that was generated for the previous year. So if you go to, just back up a little bit, I'll come back to that, but if you look on page 51, right, you will see that the profit for the year 2018, financial year 2018, the previous page, you see is 1,423,747. So that profit is what is accounted for as retained earnings in the statement of equity. So the profit for the actual financial year that we're discussing is actually 2,050,631. So in terms of what caused the profit of 1,423,747 for that previous year, if you look on the same page 51, majority of it, about 98% of it came from interest income. And that interest income is derived from SCI taking the capital that it raised from you shareholders and investing that in medium-sized companies across the Caribbean in debt instruments. So effectively, we invest the money and earn an average interest rate of anywhere between 10 and 15% in USD. Sure.
Mr. Chairman, you can explain to me as a shareholder, transaction within owners, issues of order of shares. We have 35 million, 100 and something thousand. You can give a little explanation on it, please.
Thank you for that question again. Through you again, Chair. So what page are you referring to? Is it page 52? Okay. Excellent. So 35,107,673. So if you look on, just to bring you back a little bit, if you look on page 50, you see where it says share capital, and beside it, it has note 15, and it says the same 35,107,673, right? So that's the effective amount of money that was raised, both from a private placement originally and from the IPO, net of the fees or cost a company in the capital raise, that's the net amount of money that SCI actually raised and has as equity on its balance sheet from you shareholders. So that effectively represents the shareholders' money.
So when it's called the expense or the 35 million, it's called the expense. You can explain a little bit on the expense side?
Okay, so which expense, show me exactly what you're referring to.
You say make 35.
Oh, okay, cool. So effectively what happened, we raised about 36 million a little bit total, and then there's a fee that is charged to raise the capital of approximately 2%. So the 2% fee, less that 36 million mash, is what gives it the 35. Yeah. Thank you.
Are there any other questions from shareholders?
Good morning, David Rose. Morning, Mr. Aiton. Quick question on page 54. I saw that Sygnus Credit Investments created a new subsidiary, Sygnus Credit Investments Jamaica Limited. Can you explain the purpose for the creation of that subsidiary?
Thank you for your question again, through you again, Chair. So the purpose of that company, as a Jamaican company, is effectively to raise $J financing for Sygnus Credit Investments Limited to deploy in new investments. So effectively, because Sygnus is a St. Lucian company, it can't raise debt. It can't raise some form of debt in Jamaica, USD debt to be exact. So that company is created to raise that financing, and then the parent company will use that money to expand the business. Okay.
Are there any more questions on our financials? Can we proceed to the resolution? It appears that we can. So I would now put the definitive resolution to the shareholders, and it reads as follows, I quote, that the audited financial statements for the year ended June 30, 2019, and the reports of directors and auditors be and are hereby adopted. All in favor? Say aye. Do we have any dissenters? It would appear that the resolution has been adopted unanimously. I therefore declare resolution 1 adopted. We would now move to resolution number 2, the declaration of dividends. The resolution reads that the interim dividends per stock unit of US dollar 0.001735 paid in February of 2019 and the US dollar 0.00249 cents paid in October of 2019 be treated on the recommendation of directors as the final dividend for the financial year ended June 30, 2019, be and is hereby approved. All in favor? Aye. Are any shareholders against the resolution?
Yeah, Livingston Young, Mr. Chairman. I suggest instead of pay once a year, it could pay twice, so we can get an increase.
Livingston, thanks, but I think given that we paid in February and October, that appears to be, well, no, technically one is in the new fiscal period, but then 2 in the same calendar year. I think we are committed certainly to pay, whether it's twice a year or quarterly, but certainly as the company progresses, the intent is that we share the success of the company with our shareholders. So your comment is noted. That's a comment and not a dissenting vote. Do I get you right? All in favor? It seems as though we have a unanimous approval for resolution number 2. So I declare the resolution carried. The third resolution has already been adopted and carried. So we go straight to resolution number 4, director's remuneration. And I read that the amount shown in the accounts of the company for the financial year ended June 30, 2019, as remuneration for directors for their services as directors be and is hereby approved. All in favor? Any against? I move that the resolution, I record that the resolution has been carried unanimously. And we now move to resolution number 5, the appointment of auditors and their remuneration. The resolution reads that KPMG Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company to hold office until the next annual general meeting at a remuneration to be agreed by the directors of the company. All in favor? Aye. Any against? I confirm that the resolution has been unanimously carried, and we're happy that KPMG has agreed to continue as our accountants until the next annual general meeting. Shareholders, that concludes the formal business in terms of resolutions that had to be approved by you at this annual general meeting. As I said before, you're going to have an opportunity now to get an in-depth look at how your company performed over the last fiscal period, that is for the period ended June 30, 2019, as well as the first quarter of fiscal 1920. To do that, Jason Morris will have the floor. When Jason is finished, the CEO of Sygnus Capital Limited, Barris Gray, would share with you an overview of the strategy for the company going forward in the near and medium term. So I won't come back to you until both of those presentations have been concluded. And as we suggested, I would think that, well, I'd let Jason determine how he takes questions and at that end. Jason, over to you, please.
Thank you, Chair. Morning again, everyone. Directors of Sygnus Credit Investments Limited, Mr. Chairman, members of the Sygnus family, and of course, shareholders and special guests. Is this one working? Okay. Okay, so my presentation is going to focus primarily on the performance during the fiscal year ended June 2019. So just as a background, Sygnus Credit Investments Limited is a private credit investment company. And what the fancy term means is simply that what Sygnus Credit Investment Limited does It takes capital, which it raised from you, the shareholders, and utilize that capital by investing in debt instruments, primarily to finance medium-sized companies across the Caribbean. And I'm going to give you examples of what we mean by that on a go-forward basis. So just a short history of where your company is coming from. So on July 1, 2017, your company started operations, and prior to that, it raised $16.5 million USD from pension funds and high net worth clients in a private placement. Fast forward to August 2017, pretty much a month after it started operations, it did its first private credit investment. And the next major milestone after that was the IPO that it did in May, June 2018, where it raised about 20 million USD equivalent, which was oversubscribed 3 times, which was a great success, given that SCI, or your company, was really a startup, still in the startup phase. One of the commitments of Sygnus Credit Investments Limited is to actually, consistently pay out the majority of its earnings to shareholders. And so the first dividend that SCI was able to pay was a significant milestone, because not many startups, so to speak, are able to actually pay dividends within such a short period of time. So pretty much right after doing an IPO, Sygnus Credit Investments Limited was able to deliver and making its first dividend payment in October 2018. In June 2019, the end of the financial year, there are 2 milestones that SCI actually hit. The first was to hit record profits of $2 million USD for the very first time on an annual basis. And also on a gross basis, SCI actually financed over 45 million USD equivalent in private credit investments across the Caribbean region. And again, I'll stress that SCI at that time was just about 2 years old. Finally, fast forward to the just concluded quarter, of which results were released, SCI was able for the first time to hit 1 million USD in quarterly income, core income. And I'll explain what core income is comprised of and why it's very, very important relative to net profits. Now to go through some financial highlights. As you all know from the annual report, SCI had a record year in more than one ways. First, it actually had record revenues of 3.2 million. And what I'm showing you here is what you call the core performance of Sygnus Credit. So there are 2 elements to Sygnus Credit Investments Limited revenues. We have what you call the core revenues, which is the revenue that it earns as interest income from investing in debt instruments used to finance medium-sized companies across the region. And then there's what you call non-core revenue. So non-core revenue may be if the exchange rate move favorable to SCI, it may record an FX gain, or it may have fair value gains on some of its instruments. Now, FX gains and fair value gains are not consistent revenue generating sources. The consistent revenue generating source for Sygnus Credit Investments Limited is what you call total investment income. And to think of total investment income, just think of it as interest income, like what, say, a bank earns, right? Because 98% of SCI's revenues come from interest income, which is you invest out the money in that instrument and you earn interest. And once you get that interest, then that's what we are using to pay out dividends. So if you want to look at whether or not Sygnus Credit Investment Limited is doing well, the first thing you need to look at in the financial statements is in the MD&A you look for total investment income, or in the actual financial statements you look for interest income. And once that number keeps increasing or growing at a steady or fast pace, then you know that we are doing our jobs on your behalf. Second thing is that SCI achieved record net investment income. And net investment income is simply taking the total investment income and subtracting operating expenses. So it's very simple. And that was 2.2 million US dollars. Likewise, SCI also achieved a record profits of $2.1 million over the period. Now this slide needs some explanation, and I will walk you through. Financial statements sometimes can be very difficult to understand. There's a lot of financial jargon, and with the new changes to the financial rules, sometimes it's difficult to make head or foot out of what the financial statements are actually saying. So what we do every quarter when we release our financial statements, we accompany it with a management discussion and analysis, and we have this table that tries to summarize in its simplest form what you need to actually look out for, or what's really important in terms of is the company doing well or not doing so well. So again, total investment income, that's your core revenue. And if you look in the audited financial statements and look at page 51, which is where the actual income statement is, and you wanted to know, well, in the financial statement, there's nothing called total investment income or net investment income. So you might wonder why that is. Of course, we have it explained in the MD&A. But for this purpose, total investment income is simply equal to interest income, which you see on page 51, plus some fees. That's it. Very, very simple. Operating expenses, if you look on the financial statement on page 51, you will see expenses. Operating expenses is simply equal to those expenses minus FX losses and minus what you call expected credit loss or provision for debt instruments. So if you take total investment income and subtract total operating expenses, you get what you call net investment income. And this is the core number you need to watch every single time when we release a quarterly financial statement. Because this is cash that is actually earned. And hence, this is what we are used to pay dividends. If we buy an asset at $10 and the price of the asset moves to 15, Sygnus Credit Investment Limited is not in the business of buying assets to sell them back. It's primarily in the business of trying to generate interest income so that we can pay out dividends and grow the company very fast. So fair value gains, which you see represented as 135,000, which is down from 644,000 and the previous year, is something that will fluctuate based on market conditions. And for all intents and purposes, while that is an important revenue generator, we're not so much focused on that. We are really focused on trying to grow the core of the business that will be able to consistently generate high dividend payments. Net FX loss for the period was 219,000. And again, that is reflective of the Jamaican dollar assets that Sygnus Credit Investments is carrying on its balance sheet. If the exchange rate depreciates or appreciates, that number can report a loss or a gain. And of course, we don't have control over movements in the currency. Provision for expected credit losses, that's pretty much due to the new accounting standards. So the reason why it was zero the previous year is that this accounting standard did not exist in the 2018 financial period. And if you look at any financial company or any company that has debt investments on its books that has adopted IFRS 9, you will see a provision for credit losses, which pretty much is a charge that you're taking up front based on what you expect the loss to be. Of course, if we invest in an instrument and we are carrying an expected loss, and at the end of the period we actually didn't suffer a loss, then the value is actually reversed. So fortunately for your company, we have been in operation for 2 years and a quarter, and we don't have any losses from any credit issues. So if you take the net investment income and you add fair value gains and you back out the movement for currency and the movement for provision of expected credit loss, that gives you a net profit. And that's how you would basically interpret Sygnus Credit Investments Limited's financial statements every quarter. One of the things that you want to focus on, and certainly for us as the advisors and managers of Sygnus Credit Investments Limited, is how efficient the business is actually operating. Now, typically for companies that are in the financial services business, or investing in debt instruments or whatever type of financial services typically the efficiency ratio is about 50%. And Sygnus Credit Investments Limited is tracking around the 30% mark. So this is actually a very good statistic to watch. If the efficiency ratio, so a low efficiency ratio number is good and a high efficiency ratio number is bad. So if you see it start to go 45, 50, 60, 70, 80%, then it means that we're not doing such a good job. And if you see us anywhere within 35% and lower, it means that we are doing an excellent job on your behalf. Balance sheet. Your company does not have any debt, so it has a very clean, pristine balance sheet. Sorry. As at the reporting day, yes, as at the reporting day. Somebody had a question? Yes. Oh, very simply. Every quarter, we produce financial statements, and every year end, we produce audited financial statements. And the auditors are the ones who will go through our financial statements to ensure that what the manager is reporting is actually true. So you have in your hand a copy of the audited financial statements, and that's how you know whether or not, that's what you use to determine whether or not what we are saying is true or not. And of course, SCI is not regulated per se, but it's a listed company, and therefore it has to abide by the reporting rules of the Jamaica Stock Exchange. So we can't afford to be cowboys running around and willy-nilly investing your money without being truthful and having very, very high integrity. So having zero debt is excellent, right? But going forward, to grow the business, as you'll see later in the presentation, Sygnus Credit Investments Limited will actually take on debt. And taking on debt is a very good thing to do, because if we are able to borrow at a low rate and invest that money at a higher rate than the cost of borrowing, then what that does is increase value to shareholders and increase profits and increase dividends that can be paid out. So the fact that SCI, as at the audited year end, didn't have any debt tells you that its growth potential remains very, very strong, because what it can do, it can take on debt, also known as leverage, to then grow the business. Yes, you had a question? Yes.
The foreign exchange
Yes.
from 49,000 to 219.
Yes.
So
Which is
what are you going to do?
so as I was explaining before, the exchange, the FX loss is related to, so Sygnus Credit Investments Limited reports in USD, and the majority of our investment, of your investments is in US dollars, but it also has some Jamaican dollar investments. And the reason why it has some Jamaican dollar investments is because it earns a much higher rate of return on those Jamaican dollar investments. So on Jamaican dollar investments, on average, you earn about between 13 to 15%. So even though from time to time the exchange rate may fluctuate, and that may result in unrealized losses on the Jamaican dollar investments that we are holding, in the long run, the shareholders benefit based on the very high return that we are making on those Jamaican dollar investments. That's the first point. The second point is that because SCI has no debt on its balance sheet currently, and it intends to actually raise debt, it's going to raise that debt primarily in Jamaican dollars. And by raising debt in Jamaican dollars, that will reduce the potential for fluctuations in exchange rate and Jamaican dollar assets, because Jamaican dollar liability will net off against Jamaican dollar assets that SCI is carrying. So that's how we manage FX risk. Sure. Any other questions?
Yeah, Mr. Chairman, turn back to page 59. Note A. You there, Mr. Chairman?
I think he's...
59, yeah.
But you just ask me the question, I'll take it.
It's a impact for transition, sorry, yeah, to IFRS 9 on opening restated earnings and fair value received is as the following. Note A. Look at this, Mr. Chairman. You're closing, hold on, wait, come in. Because it, yeah. Under financial losses, losses receivables. It's under IFRS, because if I can't find it, clauses are available for sales to FVIPL. Explain this 87 million and 53,000. Explain to it a little bit on film, please. And the earnings.
Okay. So basically, what you're looking at page 59 is
Note A.
the impact of transition to IFRS 9, which is the same regulation I was referring to, right? Which is, okay, so effectively the $87,503 represents fair value, and fair value simply means during the previous financial year, the way that that instruments whose price move up and down in value due to market changes, which is what fair value through profit and loss kind of represents. The way that we accounted for those instruments in the 2018 financial year is different from the way they are accounted for in the 2019 financial year based on the accounting change. So effectively all that happened from the previous financial year is a reclassification of that dollar value to the new classification, which is fair value through profit and loss.
Let me see, security purchase under agreement, investment, financial losses available.
That's on the same page 59?
Yeah.
Still note A?
Yeah, look at it. You see the bracket between what? 1,758,000. And look at it come down. Like it's an addition, like an add up, and a minus sign. You see there under fair value.
Okay, so all of these values, right?
Yeah.
So securities.
So
these numbers are not millions. First thing, it's 1,758 US dollars.
Sorry. Yeah. All right, just a mistake. Yeah.
But to explain, right?
Yeah, we just want to explain it. Yeah.
So basically, recognition of expected credit losses. Yeah. So this number that I was showing.
And a security value. Yeah.
So remember this provision for expected credit losses of 74,000.
Yeah.
So at the start of the financial year, that is when Sygnus Credit Investments Limited adopted the new standard, IFRS 9, which means that we now have to start measuring debt instruments. And
I can explain the committee on the debt instrument.
Okay, sure. So effectively, what Sygnus Credit Investment Limited does, and I'm going to explain the simplest way. Let's say Director Thompson here has a company and he's seeking some financing, and he comes to Sygnus Credit Investments and said, can you fund me? And he wants $100. So Sygnus Credit Investment Limited goes, looks, at all his financials and everything, and agrees to invest $100 million in a debt instrument with him, right? So effectively, we give him $100, and he's supposed to pay us back that $100, let's say at maturity, and during the interim, he's paying us interest. Every quarter, he's paying us some interest. So that $100 that we quote unquote give him or invest in his company, at the time when we actually invest that $100, based on the new regulations, we have to try and figure out what is the risk of losing a portion of that $100. And that requires us using what you call probabilities to say, okay, we think there is a 1% chance that Mr. Director Thompson will actually not pay us back the money. And if he can't make the payment of the money, how much will we actually lose? So if we look at it and say Mr. Thompson is a very good guy, and his history has been that he consistently pay back money to other people that that invest in his company, then it's a very small chance that we lose money. So what we do is put in the financial statements to say we think that if we invest $100 in Mr. Thompson's company, the risk of loss from that investment would be, say, for example, $1. And we put that $1 as a provision for expected credit losses. So that's what the figure is. So the securities purchase and a resale agreement, effectively, the very first time when we were doing this, we had to look at what's the value of the expected loss and all the repos that we have. And that's what securities purchase and resales are. And then we also had to look at what's the value and all of the investments we were carrying on our balance sheet. And that's what the value was. 5,800 US, 1,700 US. And for leases that we are carrying on the balance sheet, $257.
Mr. Chairman, suppose me come and borrow $1 million US from you, and me can come up back with it for do business, and me can come up back with the money. Why you give the customer more time for and if they can't come up, how you work out that?
So excellent question, right? So first of all, Sygnus Credit does not lend individuals money; we only lend companies. That's the first thing.
Yeah, the company.
Yeah. So the second point is that when we are actually providing financing to companies, we have to look at their. So there are a number of ways to mitigate risk. One way is that effectively we can have collateral, charge over collateral. Other way that we ensure we are always monitoring financial performance, right? So we pretty much look at your financial statements, look at your track record, look at your history, and then we determine whether or not you're good risk or bad risk. So we're always monitoring. And of course, because we have collateral in many other instances, then if there's a challenge, then obviously we have mitigation measures. So the key difference between Sygnus Credit and say a typical financier, a bank, etc., is that it provides what you call flexible capital. So in your instance, if you had a company and you borrowed $100, for argument's sake, and because we are monitoring on a consistent basis every quarter, we are sitting down with you and realizing that you're going to have a problem making your payments 6 months down the road. So one of the things that we could do is pretty much reorganize or reschedule the payments because we know that you have a challenge. So it might be that you're in a business where you make widgets and sell them, right? And you had a contract to deliver 100 widgets, and the person who you're supposed to deliver the 100 widgets to decided that they have a delay. So instead of you being able to deliver in December, you have to deliver it in January. And because you're going to get paid in January, the money that you're supposed to get to pay your interest in December, it causes a problem. We wouldn't come and sell the assets that we have as collateral for you. What we do is pretty much just, reschedule the payments. So that's what we mean by flexible capital.
All right, Mr. Chair, thank you.
Sure.
Mr. Chairman, morning. So your trade payables, your payables.
What page are you looking at?
87, page 87. I saw that you're having some problem with your trade payable. Is it that you're borrowing or you're not paying? It amortized significantly from 116,000 to 15 million. That is USA.
Page 87?
Yeah.
So you're looking at what line?
Foreign currency liabilities.
So note what? D?
Yes.
Okay, so you're asking about what
Your trade
specifically?
payables.
On
Your
page
payables.
87?
Yes. It's not note D, it would be foreign currency liabilities.
Oh, okay. Okay, on page 87, foreign currency assets, cash, that foreign
Security
currency.
deposit, accrued
Okay.
expense.
Oh, okay. So 15,227,30 is actually Jamaican dollars, right?
Yeah.
Says 116,619 USD. So effectively what happened,
So it's not say it's a loss, you know. They say it just moved from the Jamaican dollar to the US dollar, so we don't multiply by the exchange rate. So it's not a loss.
Okay.
so,
Okay.
so effectively what happened here is that from time to time, we may have payments that are supposed to be made, and there is a delay in making the payment for whatever reason. So that's what this is. It is not credit. So we didn't borrow any money and can't pay it back because we don't have any debt.
Okay.
You follow?
No, go ahead. Repeat that.
Okay. So let's say SCI owes some fees for a transaction that was conducted on the 27th day of November. And it's supposed to pay over those fees, right? And it didn't get to pay the fees until the 1st of December.
Okay.
Then it's going to show up as a payable.
Okay.
But I'm saying SCI, this
it's
payable
a
is not
late
coming
payment.
from SCI borrowing money and owing it as a debt and then can't pay it.
It's just a
The
late
payable, the payable come from the normal course of doing business.
Okay.
Because it has to pay management fees, it has to pay fees for legal bills, all kind of fees that it has. So whenever the financial reporting period passes, any money that it owes for fees or whatever it should pay for, and the cash didn't pass hand, then it's going to show up as a payable. But it's not coming from a borrowing that SCI did in terms of borrowing debt and then can't repay the debt.
Okay.
So it's a good payable to have, because basically the longer you take to make these payments is the more money you as a shareholder earning, because we're earning interest on that money.
Okay. I see what it means.
Indeed.
And you're really cashy, you know?
Very. Well, you are the one who's cashy, right? It's your company.
Mr. Chairman, I have some questions around the debt, the interest return.
Okay.
You said you lend at 13 to 15% in Jamaican currency.
And higher sometimes, yes.
Right. So in a low interest environment, wouldn't that mean that these companies are ones who has a low credit profile, meaning that they couldn't go to a commercial bank and borrow at much lower interest? So how much would you be borrowing at to be able to lend it at, say, 15%? And yes, all right.
Excellent
yes.
question. So you asked two questions in one. And,
Yes, and I have
and it's a
another
brilliant
one
question,
here.
actually.
Yeah.
So let me take the first part of the question first. So Sygnus Credit Investments Limited provides what you call flexible capital to medium-sized companies. And many of these medium-sized companies actually pretty much all of SCI's medium-sized companies actually have banking relationships already. So they can borrow from a bank. However, the type of financing that they require, a bank is not the best source of that financing because of the customized nature of the financing that is required. Let me give you an example. Let's say, and this is a real actual example, sorry. Let's say company A, right, wanted to buy company B for, $500 million. So to buy company B, it has, a portion of the capital to purchase the company in equity, and it needs another portion to actually bridge the transaction before the transaction is actually completed. That type of transaction, company A can't really go to a bank and say to the bank, I want to borrow some money to buy this firm, because the bank is going to need all types of collateral to do that, right? So that type of transaction, if you look at the risk spectrum, at the very top of the risk spectrum, you have banks who are very ultra safe, and then at the bottom of the risk spectrum, the riskiest, you have equity, which is when they just go and buy shares in a company. In the middle, in between where the banks are and where equity is, that is the space that Sygnus Credit Investments plays in. And that's what's called private credit. So in order for a company who is doing a buyout of another company, is a M&A transaction, M&A deal, they need a bridge for maybe 6 months or a year because the company that they are buying, they're actually going to list it on the Jamaica Stock Exchange or they're going to list it somewhere else for argument's sake. So when we look at that type of transaction, we will actually charge, or that company needs to pay us a premium above what banks would actually provide you to provide that type of financing to conduct that transaction. So that's one way in which we earn double-digit rate of return. A second way, and this again is another live transaction, in which we earn a double-digit rate of return. Let's say the good Director Thompson here again has a company, right, that makes widgets, for simplicity. And he has an order for that will double the amount of widgets that he can currently supply. Mr. Thompson already has bank financing, and therefore he doesn't have any additional collateral to go to the bank to say, lend me X more money. So who can he turn to? Well, the leaders in the private credit market, Sygnus Credit Investments. Because what Sygnus Credit Investment will do is say to Mr. Thompson, okay, Mr. Thompson, what you need to do is sign over that order for the widgets that you have. So effectively, we will basically be buying the widgets from Mr. Thompson at a discount. So let's say the widgets cost $20. We buy it at, let's say, $15, right? So we buy it at a discount. And we know he has a market for it because of his track record and this new contract that he has. So we buy it at a discount, but we don't take delivery of it. It remains in Mr. Thompson's warehouse. And then every month or every quarter, Mr. Thompson, who needs the widgets to sell, he buys back a portion of the widgets from us at a premium. So every quarter, let's say he's buying back $100 worth of widgets, and he used to make 15% margin on the widgets. He's buying back at, say, 1 or 1.5% margin. So your company, Sygnus Credit Investment Limited, is making 1.5% every single time he's buying back $100 worth of widgets. And if he does that for 12 months, consecutively in a year, Sygnus Credit Investment Limited would make 12 times the 1.5% on the amount that he's buying. And that's how Sygnus Credit Investment Limited generate double-digit return. So it's an excellent question you asked, because we are not trying to look at very risky companies to lend them at higher rates. What we are trying to do is to look at companies that require flexible capital to assist them to grow faster. If company A is trying to buy company B, company A is trying to double or triple its growth. That's why it's buying company B. And so in that transaction, getting Sygnus Credit to bridge that M&A deal is a good thing. Okay. In the other instance of Mr. Thompson trying to double his widget order, we are also facilitating him to grow very fast, which is something that in those two situations a bank couldn't help him with.
Okay, so I get that. So you're somewhere between factoring, mezzanine financing, and private equity. Now, if you explain that to shareholders, as you've done so to me just now, why not have confidence to say to shareholders, well, your share price have done well since you've done the IPO. Wouldn't it be better to go back and say, let's do a rights issue rather than debt financing? Because you would start from...
You know, we need to bring you into the Sygnus team, right? So you preempted the presentation because we are in fact. So we have been authorized to raise an additional $35 million in capital in both debt and equity. Okay. And at the appropriate time, we will be doing the debt raise as well as the equity raise. And okay. you will all hear about that in short order.
Okay. Yeah, but you didn't answer me though about how much would you raise, how much interest you would pay on that debt.
The interest and debt that we would borrow. Yeah. So anywhere below 6.5%, that's where the market is now in J dollars. So if we are financing below 6.5 and we are investing at north
15, yeah. Okay.
double that rate, then basically that is,
Okay.
money in the bank for you shareholders.
Thanks. Thank you.
You're most welcome.
Hi. I wanted to ask, in addition to the rights issue, what consideration would be given to the shareholders here today in terms of preference? And I also came in a little late, so I was wondering about your strategic long-term plans. Do you plan to expand globally? If so, you could just explain to us.
So excellent question. So I have the strategic plan, and my CEO, Beres, is actually going to go in depth in it, so I will answer that question later. But in terms of the first question, absolutely, if we are doing if we are doing a pref share offer, the shareholders of SCI would absolutely 100% get preferential treatment.
Yes, Mr. Chairman. Livingston again.
Yes, Livingston.
You can explain to your shareholders what is the plan for between 2019 and 2021? What is the plan? Explain to it.
I will explain it. Okay, let me just go to it. Since so many people are asking. So pretty much, right, we are focusing on three things. The first thing is to double the business. And when we say double, we mean grow at double the rate that we are currently growing, right? And that's the reason why we are going to be raising, well, that's the reason why your company is going to be raising additional capital. Sygnus Credit Investment Limited actually has, a very robust pipeline, as you would have seen from the Q1 September 2019 report. It actually did a record 13 million in new transactions in that quarter, and I can't say anything beyond that because obviously I don't want to give out non-material, non-public information, except to say that that's an indication of the type of pipeline that Sygnus Credit Investments Limited has, and that's the reason why the advisors / manager requested from the directors an increase, which they approve, an increase in capital. The second part of the question about expanding, so as at the end of the financial year, SCI was in 5 Caribbean regions, and I would say that SCI will be expanding aggressively into in terms of financing investments in many other Caribbean regions, because the ecosystem for the private credit channel, and I just explained if you had an M&A and so forth and so on, it doesn't really exist. And Sygnus Credit Investment Limited is actually a pioneer in that space. And so we are seeing where a lot of medium-sized businesses right across the Caribbean actually need this type of very flexible capital. As a comparison, in the US, this channel that we are speaking about is actually the engine of growth, right? Because medium-sized companies account for roughly 40% of all the jobs created in the US. And we don't have this ecosystem or this space in the Caribbean, and what we are trying to do is to really broaden this channel and let medium-sized companies know that there is the number one source to actually come for capital if you need flexible capital to help you grow aggressively is to come to Sygnus Credit Investment Limited, which ties into point number 2 in terms of our strategic focus, to be seen as the unambiguous number one source for flexible capital for medium-sized companies once it is in the private credit space. And of course, the third thing, which is some people may overlook it, but for us it's very, very important, is to have adequate risk management, because when you are growing very fast, it's very easy to let things slip through the cracks. And so what the manager and advisor is doing is basically enhancing its risk management culture. So we eat, drink, sleep, risk management. So while we are deploying capital, we are also ensuring that we are monitoring and managing the exposures and the risk that we are doing, that we are taking on, so that we don't invest the money today and then report next week that we have lost the money, right? So that's our strategy in summary, and Mr. Gray will go through it in more depth.
Yeah, Mr. Chairman, just one more thing. May I just ask a question? If you invest your money in a company, you see, and the company not doing well, you take back out your money out of it?
Absolutely.
Just about Sygnus.
Absolutely, yes. That's
Alright.
that's an option for us. We always have option to get back our capital. We always have 3 ways to exit every investment that we do.
Yeah, it's just a point me I bring across to you, Mr. Chairman. You know, say, I don't really mix up in our company, but I just try to share something.
Yeah,
All right, we invest in carriers. I buy some whole shares in carriers. Our carriers say, then we do it for we. Because we go meeting with them, and them say, boy, we're looking for shareholders, you know, and the dividends must up there. I not say it must perfect, you know, but some of the company we do for them, it's like them not treat the shareholder, we don't feel happy with them. So I know say with you, we know say Sygnus how we could make money and we move forward.
Thank you very much for your vote of confidence.
Morning again, Mr. Morris.
Yes.
I remember earlier this year, Sygnus was about $500 million in pref share, or was that debt?
Can I repeat the question?
I remember Sygnus raised $500 million in, was it pref share or debt earlier this year?
No, it's debt, not preference, not pref shares.
Sorry.
So we have not raised any equity type capital as yet.
Can I recall that you said that you wanted to raise $500 million to $1 billion, and you're looking between those two areas, and then you are indicating that you're going to plan forward for the debt and equity. Before you even get to the expansion to the $35 million US, for the other $500 million you're trying to source, how is that protocol or planning going right now?
Well, we already have sourced the debt, all of the debt that we're looking to raise already. It's just to dot the I and cross the T, so to speak. So that's already been acquired, so to speak. Yes.
Mr. Morris,
Yes.
one quick question.
Sure.
Clearly, Sygnus has done well. Is there any concern going forward that traditional banks will adopt your model or create departments that will offer the same thing that you're offering and then lessen your competitive advantage in the market space?
Excellent question, right? So just to back up a little bit, so the conceptualizers of Sygnus Credit Investments Limited actually spent almost 3 years drilling through the business concept on the business model, and you know, to go into that business, it is not a vanilla type business. It requires a particular skill set, and there are only so many skilled persons who can actually execute what Sygnus Credit Investment Limited is trying to do. So we will welcome, you know, whoever wants to come into the space, but we think that we have the best team in the Caribbean to execute this business model, and that's the reason why it took the conceptualizers 3 years to actually polish the plan before it was actually brought to the public. So it's a possibility, but we are 2.5 years ahead of anyone else who wants to come and challenge. So we can't control what other people do, but we know that we have the absolute best team, and we have fantastic relationships that we have already built up, and a big part of our business is repeat business from the same clients. So some of these clients who had all kind of challenges accessing the type of flexible capital that they wanted to grow their business, when we stepped in and provided that flexible capital the first time, I mean, we and them are bona fides for life, right? Because we solved a key problem that they had, and they spread the word to their friends and company, right? So we are pretty confident in the execution of our strategy, and we are not fearing competition. We embrace it, because at the end of the day, the more companies that actually come into this space, the bigger the pie will be for everyone. So we actually have no fear of anyone challenging us or challenging your company. Yes.
Yes. Another thing here. Why is it that management fee of amortized from 182 million to 700?
Excellent question. So in the prior financial year, when Sygnus Credit Investments Limited started, the investment manager, in giving shareholders something, did not charge any management fee at all. So the way the business operates, A management fee of 1.9% is charged for managing the company and delivering the results that you see. But in the first 6 months of operation, which is the first half of the prior financial year, the manager did not charge any fees. So 0 fees were charged. And that's the reason why the 2018 number is so low. So it's not that 2019 is very high. 2018 is low because of that first issue. Second issue, for almost all of 2018, the total size of the company, or the assets under management, was half of what it is now. So when Sygnus Credit Investment Limited started, it actually started with 16.5 million USD that it raised in a private placement. And so the management fee was being charged, and that's $16 million. In May, June 2018, when it did its IPO and it raised an additional 20 million in capital to bring total capital to 35 million, as you see in the financial statement, the management fees charged on that total amount, right? So you had a larger amount that management fee was being charged on. So there are two reasons why it's higher. The rate, first of all, the rate is the same rate. It's 1.9% that's always being charged. But in the first instance, no fees were charged for half a year. And then in the second instance, you had a much bigger assets under management for all of 2019 versus a smaller assets under management for 2018. And that's the reason why the management fees where it is.
So, okay.
So in other words, the management fee is not going up for any adverse reason. It's just a natural progression of as the company grows in size, the management fee will increase. But the key thing is to show that as far as every dollar revenue that we generate, what are the expenses related to that, which is the efficiency ratio. We are managing it as efficiently as any company is anywhere in the world.
Good afternoon. That's one question.
Sure.
Sir Morris and Chairman and shareholders, morning. Laidlaw is the name. Just wondering, I don't know if I missed it.
Mm-hmm.
The dividend and your dividend payments was what? 3 payments for the previous
Every 6 months. So 3 dividend payments. October 2018, April 2019, and October 2019.
Good. Just wanted to know if there is a plan to go quarterly with the dividend payments, and if so, about when would you start doing that?
Excellent question. So we will be looking to go quarterly as soon as we feel that the total size of the investments warrants going quarterly. And the reason for this is very simple. There are many shareholders who have a small amount of shares, and the cost to actually send you the dividend sometimes is more than the dividend that you are receiving, which is not beneficial to you, the shareholder. And that's the reason why we decided that for this period we are going to pay semi-annually, because at least semi-annually you're getting a nice chunk of dividends. And then perhaps when, within the next 12 months or so, because our intention obviously is to double, as we said before, to double the business. And if we are doubling the business, it means that a large part of that is using debt. Then the dividends are the earnings of the company, and therefore the dividends will actually be a bit more chunky. And once that happens, then we think it would make sense to send shareholders to start going to quarterly. So I would say anywhere between the next 12 to 18 months, if we continue on the current trajectory, we should start going to quarterly. And the only reason why we haven't gone to quarterly is simply because, to send someone a check in the mail, when it costs the check more than the money at the dividends, we felt that that was in the best interest of shareholders. So that's the only reason. Nothing other than that.
Yeah, Mr. Chairman, I agree with that, man. Say, when me look, me have two waiting in there, me have JMB and Victoria Mutual. When me look at the dividends, and to amount of shares me buy, me not millions of shares buy, I say, boy, what kind of little bit of dividends? Say, need to step out, even quarterly dividend as a man. Say,
well, so just to clarify, paying you quarterly doesn't increase the amount of dividends you receive. No.
We know.
It just increase the frequency at which you get it. So what I am saying is that as our dividends plateau meaning the amount that you're getting is bigger, then we'll start breaking it up into quarterly chunks because it could cost you to actually receive the dividend, which we don't want.
Yeah, all right. Thanks a lot, Mr.
Sure. Can I continue or are there additional questions? Sure.
Morning, everyone, right? I wanted you to elaborate more on the news that they come out last week about the Sygnus real estate finance. That's very important.
Okay. So, for the record, this meeting is about Sygnus credit investments. But all I can say about that, since I'm at a Sygnus credit investment meeting, is that Sygnus Real Estate Finance is a company that comes under the Sygnus Group umbrella. It's a completely separate company, and all it does is pretty much finance real estate assets, whether developments, purchase, anything dealing with real estate. That's what it focuses on. So it's a completely different company. Does that answer your question? It's part. So it's just a related company, but Sygnus Credit has nothing to do with it. But because Sygnus Group is the manager of Sygnus Credit Investment Limited, and Sygnus Group has created a separate company that deals focused just specifically on real estate assets. And you'll hear more about that in the future. Okay. So I'm going to speed through because I think you asked all the important questions. Oh.
Uno más. So you somewhat indicated earlier that you'd be raising capital through equity as well going forward. Can you confirm that?
So I'm confirming that we have been authorized to raise up to 35 million US dollars or equivalent in debt and equity capital.
Okay, so that's an increase from the 1.2 billion that you were approved for earlier this year in debt alone.
It's inclusive of all capital that we are currently authorized to raise. Can I continue? Okay, very quickly. I'm going to take 2 minutes. So, I don't think I need to go through this. And everybody asked me questions about the dividends already. And what you can see here, dividends are increasing. And the key point here is that core earnings, the reason why I spent time to go through that little table that showed your total investment income, which is actually our core revenues, and net investment income, which our core earnings is, because that is what affects dividends. So once those are aggressively growing, then the dividends will remain healthy. Investment activity, we had a record year, 34 million in investments, 19 portfolio companies coming from 7 the previous year. The yield on the 34 million investments was 12.3%, and we had 0 non-performing portfolio company investments for the for the 8th consecutive quarter, and as of the last financial statements, that would be 9 consecutive quarters. This just shows you that we are diversified across 8 different industries. And the regions, 5 different regions in the Caribbean. So this shows that we are not just taking all the capital and putting it in one sector and one country, etc. We're actually creating some diversification. And as time passes, this diversification will increase. And that will be down to the benefit of shareholders, because what it means is that we can navigate different economic cycles versus if one country is having a challenge, you're completely exposed. And of course, we are using different type of notes, and I think a question was asked about factoring. Yes, we do factoring, and we do inventory financing. And any note that we do, it's customized to the particular client. So we're not going out there and buying bonds, for example. That's not our business. We're actually pumping capital into medium-sized companies directly and giving them that investment in a very flexible means. And I think I went through the strategy already. So, therefore, thank you very much for your patience, and thank you very much for the excellent questions.
Mr. Chairman, directors of Sygnus Credit Investment, shareholders, and my Sygnus colleagues, good morning. Morning. And Jason, thanks for an excellent presentation. And shareholders, before I get into talking about strategic direction, I would also like to say I am humbled and very excited about your participation. Yes. So my name is Beres Gray. I'm the CEO of Sygnus Capital. Yes, so I was just saying that I am humbled and really encouraged by your participation. It was very energetic and inquisitive. When we at Sygnus think about how best do we manage and execute the strategy of Sygnus Credit Investments, we really think about three things. One, how do we grow and preserve shareholders' value? How do we manage risk? And how do we ensure that we are delivering consistently on our promise to shareholders, i.e. dividends and preservation of your capital, meaning managing downside risk. So those are the things that preoccupy our mind and our thinking and our strategy, and it helps to design what we do. As Jason pointed out, Sygnus Credit Investment core strategy is to provide flexible capital to medium-sized firms across the Caribbean. And flexible capital means customized credit solutions. And the reason why we took that path is because by providing customized credit solutions, you create greater alignment with the firms that we are investing in and your firm, Sygnus Credit Investment. What does that do? By creating alignment, you build long-term partnership with your clients. And by building long-term partnerships, we are able to generate sustained shareholders' values, as well as allow us to grow with those firms and can generate the type of returns that we promise and the firm, Sygnus Credit Investment, aspire to. Jason touched a little bit on that when he talked about why is it that Sygnus Credit Investment should not be, should not worry too much about competition. And that's because Sygnus Credit Investment seek to build long-term partnership with its clients. And, partnership is a very deep-rooted relationship. And that will allow us in the medium term and long term to deliver shareholder value. In terms of risk management is fundamental to the business. Fundamentally, what Sygnus Credit Investment does is take credit risk. It invests that type credit instrument into companies and get a return for that. So the performance of the company that it invests in is very important. The ability to repay or to service the credit. That's just one part of the process. The management of that relationship in terms of some of the things Jason spoke about, in terms of monitoring, being close to the client, and in the worst case of processes to exit the relationship when needed. That is very important. At Sygnus, the reason why we believe that we will continue to use strong and robust risk management to generate value for you and provide downside protection, and by downside protection I mean we are not going to speak here and say we are growing your portfolio, we are generating all of these good return, and then on the other hand we have a NPL, non-performing loan book, which is significant and deteriorating the capital that we raise from you. That would not make any sense. So as a business, from the very screening process, when we look at a firm, analyze its financials, understand who are the owners and so forth, and understand the position of that firm in this industry. That's the first part of our risk management process. The other part, which is very important, is that at Sygnus, we have absolutely the best investment banking and structuring team to execute on this transaction. What does that mean? That basically means that unlike other firms, we are designed to be creative, find the right solution, whether it means the right type of documentation, the right type of instrument. Jason touched on some of them. Right type of instrument that will solve a client problem, but at the same time sort of wrap that with the protection that Sygnus Credit Investment demand and require to preserve shareholders' capital. The most important thing, though, in our risk management process, and this will endure throughout the time of Sygnus Credit Investment, is what we call the integrity in the risk management process. Any solid financial institution, whether it's a bank or a near bank, or whether it's a private credit firm as yours, must have integrity in the adjudication or approval process. What does that mean? That basically means that you create separation between the team structuring the transaction and the team or the persons making the approval. And by doing that, you remove a lot of biases. And we have that well embedded in our business, and that's very important to grow the business and ensure that we manage downside risk. As a consequence, of course, we are seeing some of the results. And that's why you see right now, after 2 years, even though we have invested out over 38 million and in 19 companies across 8 industries, I believe, in 5 countries, we still have 0 non-performing loan. So all of that I just talked about, that's just manifesting itself in that data point. And if we continue to manage accordingly, we expect the results in terms of non-performing loan to be impressive going forward. Let me touch now on what I think that you are most excited to hear about. So over the last 2 years, the business has grown tremendously. Jason pointed to the numbers, and I think if you think about what your firm has done in 2 years, Sygnus Credit Investment has basically in 2 years, starting from $16 million in capital, established itself as a leading private credit investor in the Caribbean. You have formed a pioneering entity, an entity that will forever change the landscape of how medium-sized firms access capital in the Caribbean. This is a legacy journey that you are on, and I really want shareholders to appreciate this. Okay? You probably don't realize it, but you are on a legacy journey, and we are going to work for you to grow this business. Right now, the pipeline of the business is very robust. That we have opportunities across various sectors, from mining, energy, financial services, manufacturing, in excess of $40 million. These are opportunities that we are actively talking to clients on. Some of them we have issued proposal on. As a consequence, we are going to seek to raise new capital, as Jason said. The board of Sygnus Credit Investment has approved $35 million in new capital to take advantage of these opportunities. The intention, of course, as I keep reiterating, is to grow the business, take advantage of those opportunities, and manage the downside risk. So we will deliver the type of yield that Jason pointed out, 12% plus. We will also deliver consistently, I would say, attractive dividend payment, and we will take into consideration, at the right point, if we can do quarterly. So we are going to grow the business prudently so that this legacy journey consistently reflect improvement in the shareholders' value that you have been enjoying. So from a diversification point of view, right now we have just about 60% of the portfolio invested in Jamaica. Our long-term goal is to have about 40% invested in Jamaica. We will also continue to maintain a higher proportion of investment in hard asset investments. And obviously, all of those is to preserve your capital, because as we can grow the business by giving a diversification across geographies, across industries, and in hard currency, then in the long term, we achieve the returns that we promise to you, as well as preserving the capital if there is a switch in business cycle or significant deterioration in the financial market. So in terms of outlook, we believe that 2020 will be a great year for the shareholders of Sygnus Credit Investment, and I believe that we are going to do everything that is possible to make sure that we deliver the same and better result to what we have done so far. Let me just touch briefly on some developments which are very important. When you talk about growth, it's not done within a vacuum. There are some new developments that have taken place within the environment that will benefit Sygnus Credit Investment significantly. The first one, and you should be, I would say everyone in this room should be very proud of this. The first one is that Sygnus was a founding member of the Caribbean Alternative Investment Association. And this association, was championed by the Development Bank of Jamaica. Sygnus, along with a few other firms who are in the non-traditional financing space, and a few traditional financiers, team up to form this association. What this association will do, and in the global market, these are best practice things. In the global market, you have Venture Capital Association, Alternative Investment Association, and right throughout the US and Europe, etc. What they will do, and what the Caribbean Alternative Investment Association will do, will lobby and work with the government and different stakeholders to make sure that there is a space in the financial services sector across the region for alternative non-traditional financial institutions such as Sygnus Credit Investment. This is very important, and the reason why it's very important is because you actually can most time only influence great changes when you come together as an organization and as players, and can then leverage the expertise and the strength of different institutions. So this is a great addition to the financial ecosystem, and it will benefit Sygnus Credit Investments. The other point I want to touch on is that there have been recent changes to the pension regulations in Jamaica. I think most persons in the room would have heard about this. This also will benefit, we believe, companies such as Sygnus Credit Investment, because it will allow Sygnus Credit Investments and other companies in the non-traditional space to access just a wider pool of capital that is now managed by the pension funds. So when you think about growth, you have to think about the environment. We call it the ecosystem, where you have regulations and different players, and of course, how is the pool of capital that will sustain the growth of the business, how accessible that is. So that's very important. So I wanted to share that with you. So to wrap up again, I would like to congratulate you, the shareholders of Sygnus Credit Investment, congratulate the directors for overseeing the company and ensuring that Sygnus, as manager and advisor, continue to execute on the mandate of Sygnus Credit Investment as we had promised the shareholders. And then finally, I would want to say a big thanks to the Sygnus team who have worked very hard. And I can assure you as the CEO of Sygnus that the team is absolutely committed and focused on delivering shareholder value and managing downside. Thank you very much.
Thank you very much, Mr. CEO. I don't know about you, but I'm very excited about what Sygnus is doing. I mean, 2019 has been 2018, 2019 has been a record year for us, as Jason pointed out. And I'm excited about the future. Barry's talked about the legacy that we are building and the journey that we are on. And so I'm excited and I'm happy that you have placed the trust in us to take you to that place. I'll now hand over to Mr. Chairman in St. Lucia.
Thank you, Gregory. Got you. Shareholders, we've come to the end of our annual meeting. My own perception is that it was a very good and useful meeting. I reiterate Jason's point that the questions were piercing and insightful, and the answers were equally adequate. On behalf of my colleague directors, I wish to congratulate the management team, ably led by Barris, Jason, Ike, Sherilyn, and all the other members of the team for the excellent work that they have been doing. And certainly at the level of the board, we commit to ensure that your company is governed properly. Governance is absolutely indispensable to a successful company. Without governance, everything can fall apart almost immediately. Before I bring the meeting to a close, I think I should recognize Dean Knight and his team for excellent connectivity. I mean, we know we live in a wide world. So I'm here in St. Lucia with my colleague, director and secretary, and we're having a seamless annual meeting in Jamaica also. I'm asked to remind shareholders that in order to satisfy your needs seamlessly, you need to provide banking details to our representatives on spot or later via to the company at our address at Lady Musgrave Road. We also need your email addresses so that we can communicate with you easily, be it notices of meetings, annual reports, whatever it is. So I'm going to ask you to make a special effort, if you have not yet done so, to share your emails with us and make sure that we have your banking details for the seamless payment of dividends. At this juncture, I'd like to again thank shareholders for coming out, and certainly thank you for your support throughout the year, and we look forward to your continued support in the future. Thank you so much. Have a wonderful evening, and we will see you at the next annual general meeting. In between there, I know that Barris and the team have regular investor briefings, so you'd see our representatives on an ongoing basis. Thank you so much again, and have a wonderful day.
Thank you, Mr. Chair. So the only thing left on the agenda is for me to give vote of thanks, which we have been given all morning. I think there's some refreshment afterwards. So I just want to formally thank you, the shareholders of this company, for the confidence placed in us, the manager at Sygnus, to deliver shareholder value, which we are currently doing, and we hope to continue doing so in the future to come. To thank the Pegasus Hotel for allowing us the space to have our meeting, Phase 3 Production and Agile for keeping us connected and linking us up with the chairman and his team in St. Lucia. Also our PR and marketing team, Garrick Chick and so on and so forth. Digital Global as well, keeping us live on social media. And of course, the Sygnus team for the hard work in delivering to you, the shareholders, the record profits and value. The board of directors led by Mr. Chairman Clement Wayne Aiton and the rest of the board members here, Peter, Hope, and Damien and Ike. And the media for coming here on time to ensure that they don't miss anything. I hope to see some nice bite tonight on all the leading media houses station tonight. So yes, and everybody who made this possible. Thanks for coming again, and we look forward to seeing you at our next AGM and our regular investor briefing. And again, there's refreshment at the bank. Thank you again for coming.